Good morning and welcome to Trading with Larry Live. It's Larry Benedict joined by Eric Shamilov. Good morning, Eric. A new week, a new mantra. Friday literally had one of the worst Nasdaq days of the year. Nothing crazy, a couple of percent. And today, everything is back to normal. Market rallying. Not really sure why. I'm thinking just, I guess the news out there, doesn't really have an effect on the market, but like this was one of the worst weekend news cycles that I've seen between the thing in Australia, the thing at Brown University, and just in general, looking at the world, it's really kind of upsetting.
Well, things in yeah, there was a couple of things in California too, as well.
Yeah, it's rather upsetting. So we have to I guess take that out of our mind for trading. I don't know why, but you do. And here we are, market about 33 handles on the opening, which is fairly significant considering we only went down 70 on Friday. So they got half the move back before we even start trading today. And, again, we're now the middle of the month, and you got quad witching, which we'll talk a lot about this week. We have a product that we put out that has been very successful trading quad witching, which is the simultaneous expiration of futures, options, stock options, etc. And I've been doing that for basically my almost entire career. And we find the anomalies in the market between the spread prices between the two futures and open interest, etc. And we put out a trade based on that either today or tomorrow. Sometimes we put it out Wednesday, but that's really kind of late because the expiration is Friday in the morning. So you'll probably see that to your inbox. And, that's what we're kind of focusing on this week. And just interesting, the market
Tell
move.
us, tell us a little bit about this quad witching trade because of all your trades, this is one of my favorite ones. It's it has a little bit of a systematic flavor to it. It's on the calendar every quarter, and why don't you tell us a little bit about it?
Sure. I did tell you a little bit about it, but
Tell
basically,
us more. Tell us
I'm
how
not
you
telling
trade
you
it.
that much more. You have to be a subscriber to get that. But I will basically go over, what it looks like. Basically, what happens is with the simultaneous expirations of all of these things, there are undercurrents or market forces that push the market significantly more than what it would do on a regular week because I talk a lot about the rig, and this is one of the most rigged products or most rigged trades out there because you get to cash out your option
Hmm.
without any trading. So let's say the cash is at, like right now, the cash is at basically 68.60. Um, the cash out could happen, and I've seen this before, $40 higher than where the market is trading because what happens is it's the opening of each stock, and you got to remember each stock doesn't open at the same time. So they can open IBM at 9:30 and oh 02 seconds, and then they open another stock at 06 seconds, and they push up and down the cash to an extreme, and that's where the money is made, on that expiration. But the setups are set up by the future spreads, the price difference. Like right now, people that are trading futures are trading for expiration December futures, but like for someone that's a regular futures trader, they're trading March futures right now. They're not trading Dece. So this expiration happens off of Dece futures. So you watch that spread between both markets and you're able to ascertain whether the big institutional money, which is in the hundreds of billions of dollars, is rolling that position to March or letting it expire. And if they're letting it expire, it usually, jams up the futures a lot more. But we'll get, more into that as the week goes on. I don't want to spend a ton of time on that. But
So
that's
you
the
called
next.
this a rig. You called this a rig, but you're able to profit from it, and you know it's a rig. Other rigs, you don't like so much.
Well, no, it's not that I don't like it. I mean, listen, there is a rig that I don't like, which is the front running of your order flow. That's a rig that I don't like. Regular market rigs, you just have to adjust to. We've been adjusting this year to this big market on close imbalance, which really doesn't mean a lot, but we used to be able to trade that and make a lot of money. And now that's become a reverse negative clue. So, like if we get the imbalance, which means stock to buy or sell on the close, and it's to sell, we know it's to buy. And when it's to buy, we know it's for sale. I mean, it's just unbelievable how this thing shifts around. So we've adjusted to that clue. So I wouldn't call it as much a rig. The front running of order flow is a rig, okay, or your orders is a rig. But this stuff is just, market anomalies or market things that are happening in the market. So we have to adjust to that. And we've been able to do that. But, a lot of exciting things I believe are going to happen in 2026. I really think that it's a year for extreme volatility. Um, I think that there's going to be a lot more uncertainty, certainly a lot more uncertainty in the AI space or whatever. You've seen a deterioration the last week in that space. And if you look at Nvidia, for example, listen, is Nvidia down? No, Nvidia is not down, but Nvidia to me, and we happen to be long it this morning. We're probably going to get out. It's only up a couple of bucks, which I thought it would be stronger. But Nvidia is up 27.5% year over year. It's a lot, right? But it's not anything of Nvidia. You know what I'm saying? So up 27 and a half for what's gone on here is really down. And if you look at Nvidia at 175, where it is now, it's basically 30 points off the high, which is 15 to 17%. So technically, you could think that this stock is going to be in a bear market, or definitely it's in a correction right now. And for the month, it's down 10%. So, that's the bellwether of bellwethers. Okay. That's the IBM of the old days. When I started trading in the 80s, IBM was really the bellwether. They called it the bellwether. This is the bellwether. It's come off a lot. Let's look at like a stock like Oracle. Oracle was having a ridiculous year, right, Eric? It was up like almost 100% on the year. Guess what? It's up on the year now, 8%. Okay. So where is the true I mean, I know Nasdaq's up a ton, not a ton, but it's up 18% or whatever. But where's the leadership? Is it all Google? I mean, where's the leadership coming from? Okay. Let's look at Amazon. What do you think Amazon's for the year? Amazon
I don't know, 30%, 20%.
down,
Just tell us.
down on the year over year, down on the year. Year to date, it's up 3%, but 1 year it's down. Okay. I think it may be all Google. I think Google's up like 30%. Um,
Tesla's been doing well.
well, we'll look at that in a second, but Google is up 63% for the year. That's where it's coming from. Tesla may be up small. Let me see. It was down for most of the year. Um,
Yeah, recently, ever since the vote, after the vote to get him the pay package, it's been
well,
rallying
how about
down.
this? In the last 3 months, it's up 15%. It's up 13% for the year and only 9%. So, like, I'm not finding, I mean, listen, Google, I guess, is the leadership. I'm actually going to toot my own horn because I'm telling you for the last 5 months or more, I've been telling you Google's AI is all that I would ever look at and all I ever do look at. So, maybe, and I'm like old school, and that's what I use. And I think it's far superior to anything out there. So I continue to like Google. Obviously, I would wait for the pullback in Google, but I do like it, and it's just funny to me how you kind of know what's going on here, right? I mean, it's close to year
Well,
end.
you're talking about where's the leadership. Here's the growth factor, okay, which all these stocks that you mentioned are part of, and I see absolutely no trend in that for the last few months, and which tells me there's a lot of churning within the growth factor, and I think where it's going. And I mentioned this a couple of times over the last few months that over the last few weeks that we've been seeing massive rotation. Is there's rotation within the growth factor towards free cash flowing companies, and these stocks that you're mentioning, they kind of rank low on that totem pole.
Yeah,
So this chart showing you a churning within the growth factor itself.
yeah, yeah. I mean, listen, I think that I was reading, small caps have caught a bid. They're always buying something, so we have to keep an eye on what they are buying and what is going on in in the market. But overall today, market's up 35 handles. It was down. What was it down on Friday? 70. I mean, it's amazing that they keep coming back and coming back and coming back. It's actually kind of amazing. Um, crypto looked terrible, got down to like 88,000 and, held down there. I do think crypto is in trouble off of any type of down move in our market. I think it acts very poorly. I don't know what your thoughts are on that. I mean, it's been in a pattern of liquidation for a while. Um,
I'm
and
watching Ethereum. I got a signal on Ethereum at right under 3,000, and as long as it's above that, I'm going to take that as a bullish thing. So I'm watching Ethereum more than I am Bitcoin for a clue here.
mhm, gold is strong. Um,
Gold is 20 points away from its year-to-date high.
how many points?
20 points from
Wow,
its year-to-date high. So,
rack.
yeah, I remember back in the summer we were arguing about a blow-off top when it was at 3,500. It's now almost at 4,500. And what's your outlook for gold for next year?
Sure. I did not think there was a blow off top at 3,500. I thought there was a blow off top when there actually was a blow off top. And then you came on this air and literally wait, you came on the air and you literally claimed that retail bought and on a down 10% move, they puked it
Those
out.
were those were two different episodes. Two
Okay.
different.
Okay. Whatever you
You're
say.
mixing it up.
Okay. Well, listen, I don't think
I'm
retail
like an elephant. I
I
remember
don't I
all.
don't think retail ever sells, just FYI. So I don't think retail bought gold and then a week later sold gold down 10%. I do think maybe CTAs or other people in the marketplace did that, but overall, that market is still crazy. I mean, silver's still going crazy. Um, I don't know going into next year. I mean, how is this not causing like any type of inflation across the board when the price of every raw? No,
Other commodities aren't doing anything. You keep hearing everybody reaching for commodities. The only commodities that really have been doing well this year has been metals,
I mean,
which
silver's
is
up.
kind of like financial. It's like financial inflation. It's not like real inflation. You know,
Silver's up 100% for the year, basically.
incredible, incredible move, incredible move.
120%, actually. It's pretty crazy. Money's been
Yeah,
made
I
there.
mean, at the beginning of the year, I've been saying gold has it goes into these cycles where the trend just continues for years on end. And I always bring up the example from what was it 2000 to 2012, gold went up almost 600%. So, what do you think about gold for next year? We're going to continue
Um,
this, or another
Gold?
blow up coming?
No, I have no idea. Listen, I don't know. I mean, I'm not really thinking about gold in that way yet. I mean, I definitely think if you have guts, silver is probably a better short for a trade. I'm just not seeing a lot. Like, I don't want to put a lot on into year end. I want to sort of wait, see how it all plays out, and you know, go from there. That's what I'm thinking. I mean, shocked at the S&P today. Very shocked. We'll see if it holds. Option prices are very, very high today. Very high. Just on the downside, very high. I mean, I'm selling puts that are 50 points out of the money and they're bid, you know? So,
Yeah, I think here's a chart of the ES. I think it's at a technical in mini inflection point here as we speak. This green line, for instance, is right next to this high value area on the volume profile, and this volume profile in blue covers all the volume that we've seen since Thanksgiving. So you could see the market, and this is an ugly looking chart because the index has been chopping around uh, and getting louder in the chop. So we've
mhm,
been, I would say, consolidating here, right? And we're at a technical point. Like this green line's your 5 and 8 day simple moving average on the ES December futures. That's also
mhm.
right next to your high value area on this volume profile chart. So it's an interesting spot. I think if the market could break above 68.70, which is 3 points away, and actually keep that for today, I think it's setting up maybe for a nice move into year end, but it's got to hold 68.70, and
But my
it's kind
but
of
my
thinking about
better
the
question, my better question to you is simple. My better question is why? Like, why Friday do we have a freak out day? Okay. That all of AI looked horrendous. Everything looked horrendous. And then
down part right here.
you come in today, literally zero news on the tape. Nothing. I mean, it's a big fat zero, right? And the market's up more than half of what it was down Friday. Why? Like that's I mean, I
I'll
know
just ask
why
you a
because
different.
it's year end. I know it's year end and they've gotta, basically put these positions on to hold the market up. But I'm just, listen, I'm not.
But if you ask that question, then you have to ask the same question for the previous day. Why would they take it down on Friday when they took it right up on Thursday?
Well, no, I thought that I thought I still. What? I'm sorry. I don't. Were you talking?
No,
Oh,
I
um,
just I
I would say I'm looking at stocks and they're beaten down, and the market's just going straight up. Like Oracle, high of the year is 350. The stock is trading 188. Okay, I mean that's a decimation. This is a top 10 company in the world. At one point, it was a top 5 company in the world. Beaten to death. Nvidia, garbage. Okay, it's going to rally, but it looks terrible. So, like, I'm not seeing where you're saying, oh, break out this or that. Where's the leadership? Like, what? Where's the leadership coming from?
why do
To
you need leadership for the market to go up? You know, uh, when
I
you
don't
have
know. I would think you need leadership for the market to go up. 100% you need leadership. Um,
that's one type of rising market, but then you have markets where you have myopic leadership, which means 7 to 10 stocks are driving everything forward.
show me the 7 to 10 stocks that I would
And
like to see them.
well, that's the
Show
big.
me.
But what you've seen recently, like I've been saying, is you have a lot of like forgotten, beaten down names doing well and kind of picking up the slack. Like I said, you have a lot of. It seems like you have a lot of rotation even within tech. That like they're selling Nvidia. Yeah, you're right. They're selling Oracle, but they've been buying Tesla and they've been buying other tech. So I don't see this like one. I don't see any day where like all of growth was just getting slammed. Maybe we had a little bit of that on Friday, but that was really
You
the only.
never listen to me. You never have that. That's the whole point of the market. You never have that. So a buddy of mine who's probably watching this podcast, we speak almost every day. And literally, we're like, okay, Nvidia's down. That means Apple's up. Or Apple's down. That means Nvidia's up. I mean, come on, dude. That's this market. So the leadership is really not there. But what's happening is it's a rotation. Google's down today, so they're buying Amazon or whatever. So that's what's going on here. It's like there's never a day really that they're all down. There's always one or two up. Markets have never been like that since I've been trading. I mean, the market's either gone down or gone up. And, now it's not like that. They're like today, you got to pick the stock that's the weakest and just stay on top of that and buy the stocks that are the strongest for the moment. And then you switch out of that. So, I do think you need leadership. You definitely need the big horsemen to take the market to new highs. You definitely need AI or you know subsets of AI to continue to rally because that's the rah rah stocks. You can't buy Home Depot today or some stock and trade it the way you can trade Nvidia. Nvidia is moving $100 billion every day or more. You know, so I think the one positive I see is I think we're going to have much higher volatility coming into next year, which I'm happy about. Okay, we're going to have high volatility, and listen, we freak out. Like Friday, I had to dance or trade a real lot yet on Friday to like save my butt on a 1.5% Nasdaq move, or it was probably 2%. Okay, the bottom line is that's going to be like an average move next year. I think the S&P is going to move a lot, and like right now we're up 36 points. It feels like unbelievable, right? We're up 50 basis points. So I think we're going to have much more extreme volatility next year. I think we're going to
That
have
I agree. That I agree with 100%. And I'll even add to that. I think next year we're going to have a good old fashioned textbook correction where I don't think at some point next year I don't think the market's going to be saved by a 3 or 4 or 5% dip. I think we'll have a good and proper correction at some point.
True. We haven't even had a 5% dip, but yes.
Coming, don't worry. We'll have a good and proper one. It's coming next year.
Why can't we go into a bear market? Why can't we go into a bear market and people listen? What we're seeing off of these earnings is one thing that's crystal clear. The market does not like companies spending on infrastructure, and there is a really good reason why. Like Facebook, you heard that, that thing that Zuckerberg said that they were going to spend 2 or 300 billion dollars on infrastructure. And then he went up to the president and he was like, is that enough? Like, they're not spending that. But even if they're spending in the hundreds of billions of dollars, that's, percentages of the NAV or the market caps of their companies, which is very dangerous. Okay. Facebook is a marketing advertising business that does unbelievably well. Okay. And now they're getting into like data centers and this and that and spending money on all this infrastructure for AI, where I think they should, not really be that involved in that. And I think all of these companies, the reason why Nvidia, I think, looks bad and is going to look a lot worse next year is all of these companies are going to make their own chips. Let me ask you this: how
Yeah,
easy?
the competition. Yeah, that is 100% true. I
And
agree
then
with
let me
that.
ask you this: how easy is it to hire an engineer from Nvidia to come work at Facebook or Meta, or to work at Amazon or to work wherever? I mean, Google's making their own chips. All these guys are making their own chips. So, maybe Nvidia is probably maybe the best short, because they're being held hostage to all these other companies, and their chips are too expensive because Oracle said so, that they're looking for other ways around it to get chips. So
Listen,
I think
50% profit margins are, companies are going to come after that and try to compete.
I think
And
so.
yeah,
I
that's
think
that's
so.
quite a profit margin to maintain.
I think so.
Your moat is only that wide. Like you know what I mean. 50% profit margins. Everybody's coming after that.
Yeah, I think so. So we'll have to keep an eye on all of that. That's big stuff for next year.
So the chat is asking what we think the SPX range is going to be today.
Today,
Today,
I hope the range is in for the day. So I don't know.
you heard it,
Um,
chat.
what?
Larry's hoping this is the high right here.
I'm hoping that the range is in for the day. I will tell you that the puts look very expensive, very, very expensive,
Which
which is
ones?
everyone, everyone. SPX 35 puts with the index implied at 62. That's like 35 handles or $6. I think that's high. I mean, just my opinion. Um, you know, but the problem is, if they turn the market, things are going to, probably fade, but we'll see. Um, it's
Where do you
interesting.
have your straddle? Where do you have your at the money straddle priced? I have it at 27. What about you?
Uh, I got it up here. Let me see. Where is this thing? It's 26, 2680. Whatever. But it's weird. The buying the wings around this seem very high then, because the straddle doesn't seem so high. So I would
Yeah,
tell.
I think part of the reason it's the market overnight has come to these short term technical points, and it's just kind of like threatening break out of that to the upside. And I have call spreads open from overnight, so I have a lot of put spreads, but I have call spreads out there.
Dude, you're finally coming to the dark side and trading this stuff. Meanwhile, I got to tell you, so, we talked a little bit, on, I think it was Thursday, about futures trading and how I'm not really doing a lot of futures trading. And, it's funny. People are out there watching the video and commenting. The comments are hilarious, like on Instagram. People are like, "Oh, it's unbelievable." I'm just stating what I'm doing and why I'm doing it. So,
Well, no, you're not just stating what you're doing. You are bashing futures trading as an inferior kind of
no, I'm
strategy.
not bashing. I'll trade futures. I'll trade them. It's just not.
That's not what people got out of that. And my stance was it's a type of weapon, right? Futures are a type of weapon. Options are a different type of weapon. You use certain type of weapons in certain scenarios. But I was surprised actually that you were bashing futures so much because the other day you had me on the phone with a friend of yours to show him the ropes on Top Step, which is a futures program.
Yeah, well, listen, you have no other choice but to trade futures to get capital. Okay. I'm not suggesting you trade futures. If they had the same thing trading options or trading equities, I would steer that person to that market, but they don't do it. And the reason why they don't do it is because futures are a live and die instrument. You either live and die with futures, okay? You're either in or out, okay? I just think options are a better way to trade the market right now. And I am a futures trader and I do trade futures and I will trade futures, okay? I want to be clear about that, okay? But right now, I'm thinking the better way to trade is to trade options, especially because listen, the volume in the S and hear this out, okay, for people out there and for you, okay. The E-mini volume is lower today than it was 10 years ago, okay. What is that telling you? That's telling you less people are trading it and it's not as important. You would think if it was so good, the volume would be higher than it was 10 years ago, but it's lower than it was 10 years ago. Okay, so that's number one. Why do you want to trade something with declining volume and not as many people involved? And now you have a market, okay, zero DTE trading options that have exploded 100-fold. 100-fold. It's up 100-fold. It is insanity what is going on. And on a notional level, it dwarfs S&P's 50 times over. So my question to you is you're a trader, you trade. Why would you want to trade something with declining liquidity, declining volume, and not as much interest rather than trade a market where there's tons more interest, tons more volume, and more novice people trading that don't even understand the product or how to price an option? Why would you want to trade futures?
Yeah,
That's the
it's
question.
too simple of a kind of setup to that question to really give any kind of like again. I just go back to futures are a type of product you use in certain situations. Like if you have a short term setup in a futures product, you want in a product that is dominated by futures. Like let's say gold, right? Like all year long, gold has been, I would say, a killer product to trade during Asian hours, like at night. You can't really trade options to pick up a 20-point move, but in futures, you pick up a 20-point move in gold, quite frequently.
Dude, I'd love to see your trading sheets, okay? Because there is no way that this thing can blow your head off, okay? I mean, if you're wrong in silver or gold, you are getting hammered, okay? And I don't like that. I don't want to get hammered. I don't want to sustain a 3.5, 4% move. I just don't. And
Yeah,
what
but you
I'm
have
telling
hold on, but you have I mean, you're saying it like if you trade options, you'll never have a 4% down move, which you've had.
No,
So
when you trade options, you have defined risk. What are you talking about? I have fully defined risk. I'm trading spreads right now all morning that have defined risk, okay? And that is very different than trading futures. You don't have defined risk. Yeah, you could put a stop in the market or whatever you have, but you can get blown out in your stop. You could put a stop in gold and get filled $20 away from your stop price, just so people know that. I mean, most of the time, you're getting a little slippage, but I've seen oil and gold trade through stops in a way that has been unbelievable. All I'm saying is, I'm not suggesting you trade what you want. You want to trade futures, trade futures. I'm just saying for me, when I can sell or buy 10 times the amount, okay, and feel much more comfortable than trading gold futures because I don't know where gold is, right? Gold right now is up $34. When I walked in, it was up $64. I mean, I don't know why it just went down, $20. In 10 minutes, it could be up $20. All I'm saying to people on the air, it's very, very hard when you don't have the clues and you still haven't explained the clues of why gold is like I don't know why gold's up today. Is it because interest rates are higher or lower? It doesn't matter if interest rates are higher or lower. It doesn't matter if the stock market's higher or lower. Doesn't so what do you get it like how are you looking to figure out gold right now is up $34 on my screen. What's
Well, here's gold. Here's
no, I
gold
understand, but
on
what's
the
the
bottom
next
panel.
$20? Like, what's going to give you? What are you looking at right now to decide,
There's
other
nothing
than
that'll tell you
price?
no.
What?
There's nothing much that will tell you about the next $10, but I would say one of the
So then, how do you
best
trade it? That makes no
indicators.
sense to me. Why? How and why are you going to trade it if
Well,
you
if
don't know
you
what's going to be the next ten
here's the
dollars?
deal. Here's the 210. Here's the 210 curve on the top panel, and here's gold here on the lower panel. Look, I've said it many times. One of the best, you talk about clues. A rising yield curve is one of the best indicators for gold. And when that yield curve is rising, that's a sweet spot for gold historically. And that's what we're
Eric,
seeing this year as well. Now, does
Eric.
that play intraday? No. But
No,
I
but how
mean,
are you saying
under
right now?
surface,
Right now, the
this is
curve
what
is actually Dude, right now the curve is actually flattening, not steepening today. Okay. We got 10-year up 6 ticks and bond up 8 ticks. Okay. That's a flattener. And it's actually a little significant, nothing crazy. But in general, the move is you're saying the steepener. There's certainly not a steepener setting up today. Today, the shorter end of the curve is moving more than the longer end. So yes, maybe in theory that works, but that's not what's happening today.
sorry, that's incorrect. I don't see I don't see the
That's
210
incorrect.
flattening.
Okay, that's incorrect. I'm looking right at the futures market. Okay, I'm just telling you that the bond is up 8 ticks
You
and
have
the
the 210
and the
right here
10
on the
year is
top
up
panel for
five
today.
ticks. That's flat. That's flat. Okay. Usually
Here's a
when
look
the
at
curve
here's a
is
look at this
steepening,
relationship over the last hold up. Here's a look at this relationship over the last month. This
okay,
this
so
is
you're
not a
telling our
correlated.
viewers that the reason gold is up 67% is because the yield curve moved 25 basis points this year. I mean, come on, whatever, dude.
You don't see this as a relationship right here over the last month?
I'm asking you how you're trading that day over day, and you just said 2 minutes ago you can't tell the next $10. So I don't know. I don't. All
Right.
I'm saying to you is today,
Not about
today
the next
the
$10.
the yield curve is flattening slightly. Okay, and gold is still up $40. That's all. So it's very hard to determine, other than price, what's moving gold. And it's all I'm saying is very difficult to predict the next $10 in gold. But let me ask you this. Wouldn't you like this kind of trade? Gold right now is 43.22. It just came in another $4. Okay. Wouldn't you rather sell the 4,300 puts where you have $32 of leeway for the next day and a half or whatever, rather than get involved in the futures? All I'm showing people is a way to look at this in a different way, where you're not, you know, listen, if you have gold wrong, you can lose a lot of money. I think when you use options, you're not in that position. You're not going to lose as much money. So that's all I'm saying. And I'm not saying to someone, because I trade futures, I just don't trade them as a primary source of what I'm doing. Now, if things change, I will. But if I'm telling you, okay, that E-mini S&P volume is lower today than it was 15 years ago, what is that telling you? I mean, it's telling me that people aren't as involved.
Yeah.
Okay. Because you would think they would be involved. No one's trading. This stuff is like liquid heroin. Okay. I mean, I'd rather be not in that. And, as you can see by option volumes, what's going on in the market. And listen, you got to put up a lot of money. What's the margin on one E-mini? It's a lot, right? What is it, like over 100 grand? Oh, it's 20 something grand, 30 grand per E-mini, right? You can get a lot of leverage trading options for that same amount of money, you know? That's why I think it hasn't expanded the way it should, you know? Just my
Yeah, it's
opinion.
15,000 per contract.
Okay, came in, but whatever, 15,000. I mean, come on. So that, you can't do a lot of contracts overnight, right? If your account has 25,000, you can't even do two contracts, basically. So I don't know. Listen, I just think you get a lot more play. Volume is there, etc. Let's take a look at the markets outside. Europe's up a little bit. We're up. Since we've gone on the podcast, markets have run even more. So you know, I don't know. What do you think? You think we're gonna explode
Yeah,
up
I
today?
think 68. I think the 68.70 on Eli. Like I said before, I think 68.70 is an important spot that it looks like the market is going to try to capture. Where it's we're right. This
Dude,
it's
if
it's a
you think that, listen to me, if you think that, you should open up your option board right now and start hitting because we have the the 6820 puts are like $4. Okay. So I don't know. I think the puts are bid to the moon for what it is. I've been selling them all morning, and I'm just a little leery that something is going to happen here. I'm a little worried about it. But
the point of control is at 68.48, so that's 20 points down. As that, and that should be. I think that would be a strong support area. 20
yeah,
points down. So to protect my call spread, I'm trying to sell 5 to 10 points below that.
nice. I mean,
So that 30 points down, 68 30s, 25s, 20s kind of look okay. Is that
why
what
did
you got?
no, no, I'm much tighter in the market here. My calls that I'm short are now in the money, slightly. I've been selling puts all morning against it. It's not really helping me. Um, um,
I think people would love to see how you do this in the middle of the day, just in terms of the money management of your account and the
not
seesawing.
not easy, not easy, not for the faint of heart, my friend. The kid behind you will. How many options do we trade on Friday?
Well, when you're on the pickleball court, it
50,
looks pretty
50.
easy.
Then I leave it to touchdown T behind me. But we traded 50,000 contracts on Friday just to save our butt.
Yeah, you're relaxing on the pickleball court. You got Thomas sweating for you, so of course it's an easy ride. But I'm just kidding.
Yeah, it's easy ride, whatever you say, dude. Easy ride. Everything's easy, dude. This is why
Sweating
we have
bullets for
we have a split screen. You on the right, no fear, no worries. Me, all grayed up, freaking out every day. Trying to you know,
trying to feed the ducks. We're just
yeah,
trying to feed the ducks.
yes, yes. What else do you see?
I'm
Look at
seeing some
oil. Oil is in my zone right now.
commodities kind of. I'm just saying, like, I'm looking at commodities. Everything is down except metals.
Hmm.
Once again.
Yeah, I mean,
And
I'm
I think
more.
people are looking at the commodity, like they'll look at the commodity index and they see it going up, and they're like, "Oh, we're going to get inflation," but you kind of drill down a little bit, and it's just all metals so far. Now, if oil joins the party next year, we're going to have a problem.
Hmm. Um, I don't know. Listen, oil ain't joining the party as long as Trump's involved. Let's talk about something different. Let's talk about the Fed configuration and what's going on here, and now who's going to be, the Fed chairman, and basically Trump tweeting out that he wants to control the Fed, etc. So, what do you think of that?
I think it's great. what, what do I think of it? I think it's another political move that the market is gonna, you know, disregard until it means something.
Yeah,
So
but
I'm hoping this works
let me ask
well.
you this
I
question.
hope this works well for real estate. That's where I hope it really works well.
Well, how's it? Real estate is getting hammered, by the way, and I don't know
Really?
how it's gonna. Yeah, it's getting hammered across the country. Yes, I mean there are pockets of strength like South Florida, but overall in the country, houses are sitting for the longest they've sat in since COVID. Yeah, I
But
see.
everybody's saying that now, right? Everybody's saying that because this has been such a long trend. Don't you think there's a chance that this has been a priced in trend? I mean, you look at home
Hey,
builders.
listen, I would tell you this. I would tell you this. I hope so. My house is, gone up in value 3x. I mean, 3x, dude. I don't even, know who can afford South Florida real estate. It's out of control. That's the problem. It's out of control. So you have two factions. You have the faction of people that have made so much money on their house, okay? But then like for me to move out of my house, if I bought a house for a third of the value of my house, my real estate taxes will be higher. Um, if I had a mortgage, my mortgage rate would be significantly lower than where we are right now, okay, in the market. So let me ask you a question. If you have a 2% mortgage, would you ever get out of your house? Why would you get out of your house? Why would you ever
I mean,
sell?
me personally, everybody has a different personal situation. I personally would if the house was right, but there's not
Time
even
out, time out, time out.
not even
You
stuff
didn't
in
hear
the.
time out, time out. You didn't hear what I said. I'm not saying what house could be right. You own your house. You bought your house for $1 million, okay? And you have a 2% mortgage, okay? Your real estate taxes on that house are $8,000, okay? You're at a 2% mortgage. How are you moving? Where are you moving to? Your new mortgage is going to be at 5%. So now your mortgage payment is two and a half times more, and your real estate tax is going to be a minimum of twice as much. That's the problem in the market. No one can move because or take value out of their house because unless you're going to significantly downsize, there's no move you can make. Where are you going to make a move to? What are you going to do? What's the move?
I think the other part of it is there's not the quality of the supply isn't there also to make a move.
Well, the quality of the supply is not there for one simple reason because nobody can sell. So there's that dilemma, and there's a dilemma of of prices being too high. I mean, I don't know. I'm hearing in New York stuff is sitting forever and nothing is moving. But what do I know? I'm basically I'm sitting in the hottest real estate area in the country. There is no hotter, pretty much. I mean, maybe Arizona. But it's very, very difficult to move. So, housing could be interesting next year. I know you're bullish on housing. I'm not that bullish on housing. I think
Yeah, for the time being, I think we may get some lower rates where the market's not expecting it.
lower rates and bonds.
Yeah,
Where do you think the 10 year is going to be next year?
under four, maybe
Where?
under three and a half.
Under four. Yeah, I mean, now you're talking about 15 basis points. I mean, I don't know. Is that really, I mean, this year, you're stating the bonds are, up on the year, yields are slightly lower, but, not anything to speak of. I think we're going to have extreme volatility to the other side. So, I would be careful, of global rates increasing, etc. But, you know, we'll talk a little bit more about that this week. I'm looking over at the markets. You know, I'm long nat gas. I'm long natural gas. Natural gas has gone from $5.30 back down to almost under $4. Okay, I mean these moves are amazing, but that's another reason why like futures are so hard. What if you had nat gas wrong? What do you're just continually getting stopped out? Like I have a position on a nat gas, and the way I have it on, basically we have a lot of leeway. But if I was trading futures and nat gas, I mean, nat gas, I forgot what they call it. They call it Gas Vegas.
There's three ways to trade futures, and try to. Number one is the age old size down. If you have $1 million book, okay, you got to understand what the volatility of natural gas is. You got $1 million book. You shouldn't be in more, and you want to hold it without being stopped and just have exposure to that. You can't be in more than two or three contracts on that. You know, expecting a 10% move, it's not going to nick your portfolio up too much. That's one way. Age old, size
And
down.
how are you going to make money if you make 10%? If you're not going to get nicked up on a down 10% move, how are you making money on an up 10% move if you're not getting nicked up? It makes no sense. You
So
can't
that's
make
do
more money
calendar.
on an up
You can do
10%
calendar
move than you
spread.
can.
You can do calendar spreads to reduce risk as well, where you don't have to be in the outright. Right? If you're thinking natural gas is going to go up, what you're really also saying is the front month of the curve is going to go up much more than the back part of the curve. So you can do a calendar spread. And then you can look. You can use futures options. Again, that's options, but and you can just you can use stops. So those are three ways I think to handle that.
Well, using options doesn't count because you're
Right.
saying
Let's
trading
go three
futures.
and a half
So
ways. Three and a half
yeah,
ways.
but listen, we're getting close to the opening. So the question today, I believe, first of all, they had the Empire manufacturing numbers. Survey was looking for plus 10. Prior was plus 18.7. You know what the number came in at?
I don't. Dude, you
Not that
follow.
anybody cares about any
You, look,
number.
you actually follow that indicator. I've
No,
never
I
heard you.
don't I don't follow the indicator. I'm just looking at it just to get a general read of manufacturing in the United States or in New York, because it's fairly large, right? The number came in minus 3.9. Okay. Now, doesn't mean anything to anybody because no numbers mean anything to anybody, but that that's showing significant weakness in the marketplace. So again, I don't know what's going to happen, but these numbers are trailing weak. Later today, I think we have this some housing index. Um, I'm expecting that to be weak, and then we have unemployment coming at you know it looks like it's coming. Is unemployment coming tomorrow? I mean, it's weird. It usually is released on a Friday, but it looks like it's coming tomorrow. Um, that's what it looks like. I don't, I, I think it's for November. So that's weird. Like the way these numbers are flowing are weird. So again, numbers don't mean a lot. Like you said, no one's looking at it. But to get a general feeling, Um, you know, you have to, think we're slowing in here. And that's it. I don't know if you want to close on anything. We're about 5 minutes away. We've chatted a while. Thing that's making me a little nervous today. I'm not really nervous, but put prices are very high. I think for today. So I'm not saying we're gonna reverse, but they're giving you an option to sell a lot of puts here. So it wouldn't shock me if the market came in a little bit here. And definitely two-way trade today. That's what I'm thinking. I don't know if you're what you're thinking.
I'm hoping right now it's a two-way trade. Again, I think for me, the level to watch, there are two levels to watch. One to the upside, 68.70 on the futures. I think if the market breaks out of that, it's going to try to keep that level. So watch that as a pivot. If it breaks above 68.70, that's one area. And then you have your point of control that measures the volume going back to pre Thanksgiving. And that point of control is at 68.47, as I showed on the chart earlier. That's a big line in the sand as well. So you got about 20 points in between that. As long as it's in that range, I'm not really pressing any buttons. And
Hmm.
so that's the gray area for the day. And then whatever the market decides to do, those are the levels it's going to try to keep.
Yeah. All right. Well, listen, we'll keep an eye on all that. Back tomorrow with an update of today's trading. And, I want to talk a little bit tomorrow more about, predictions for next year, thoughts. They always ask me, a bunch of newspapers and, shows on TV ask me for my year end surprises and what I think the market's going to do next year. So I'm going to give it to everybody here starting tomorrow and get us, set up for next year. But I wish everyone good luck trading today. Eric, have a good trading day and enjoy.
Well,
Peace. Take care.